Welcome, ladies and gentlemen, Commodity TV out of our studios here in Munich, and it's interview time. And for a long time, I'm really happy. I have Dr. Alistair Cowden here with me, the Managing Director of Altona Mining out of Australia, and he's now here in Munich with us. And we want to talk about the proposed merger with Copper Mountain. Alistair, welcome again.
It's great to be back in Munich with you, Jochen. It's been too long.
That's too long, that's right.
Yeah.
I think it was 1.5 years at least or something like that.
I think so. Oktoberfest.
Oh, Jesus,
Yeah.
that's really long.
Yeah,
Yeah.
yeah.
Right now we have to change that.
Yeah.
Now, I'm happy that you are here. We want to talk about the new merger. As we did a lot about Altona and we followed you in the last 5-6 years a lot. Your company did quite well. I mean, of course, you suffered in the copper market. Copper market was not so easy with $2 a pound. Now we are $3.22. And you were supposed to do a deal with a Chinese company, but this was ended. Maybe you can comment in one sentence on that. And then let's start to dive into your new venture, the merger with Copper Mountain.
I guess one of the interesting things about the proposed transaction with China is we'll never know why it ended, but it did. And it just tells you something about China and the West have a long way to go before we can do business together. And I think it's a good thing that it ended. Then we were able to look around and re-establish relationships. We went out to the marketplace, we talked to lots of people, and the board decided that the proposal with Copper Mountain was the best interests of shareholders, and that's what we've pursued.
Yeah, as you are also personally a big shareholder, right?
Oh, yes, I am.
So you are fully aligned with everybody else?
Indeed. I have two things at stake, reputation and money.
Yeah, that's right. So we spoke in the past a lot about Altona, about the Cloncurry project. Yes. Before we move to that, maybe can you give us a short overview about Copper Mountain, who they are, from where they come and what they do? Sure.
Copper Mountain are an established copper producer. They have a large open pit copper gold mine. Started about 5-6 years ago. They took that thing from an idea. They financed, studied, built, ramped up, had their issues as often happens in
That's
mining,
normal, I would say.
and got it into stable production now. So they're a material producer, producing around 35, sometimes to 40,000 tons of copper a year. That's material. For those who don't follow what that means, multiply by 5 and you've got gold. So about 150 to 200 ounces gold equivalent. So it's a substantial operation.
And I think they have gold and silver as a byproduct, right?
Gold and silver credits, so about around 25,000 ounces of gold credits, and I've forgotten how much silver. Lots.
I think it was 200,000 something.
Yeah,
now.
something like that.
It helps, I would say.
Every bit helps. Every bit helps. Yeah.
Okay.
And the other interesting thing about Copper Mountain is the relationships. They have built this mine with the help of Mitsubishi, the Japanese. Mitsubishi are a 25% owner of the project, and they backed the finance that helped build the mine. And Copper Mountain have some very low-cost, very friendly debt in the mine company, and it's great to have partners like that. But you only attract quality partners if you yourself are quality people.
Great. And can you say something about the, let's say, all-in production? Because, I mean, now copper at 320, they must make a lot of money, right?
Essentially, it moves around for Copper Mountain, but it's around $2. $2 US a pound. And today it's $3.20. So they're making it's about
60% margin easy,
yeah. So it's they've got to be clearing 100 million plus US.
That's very healthy.
But there's all sorts of other costs, but still it's a really good margin. So the company is now mature, it's making inroads into the debt it raised to build the mine, and it's now looking for what next. If you like, they'd almost got to the stage where they're boring. What you see is what you get. They're a miner, what next? Well, so, what's next?
Yeah, so it sounds to me a little bit like the combination is like 1 + 1 is 3. Because they need growth, you can provide the growth, you need the financing, they can provide the financing, and at the end you have a mid-tier top quality copper producer with gold as a waste product. I like that.
It's great. And if you're an Altona shareholder, where you are today is you're faced with a challenge. What do we do with this project in Australia that needs all this money to finance? Well, what we get now is expertise from guys who have built and run one. You get a balance sheet. And the day after the merger, you're also a producer. So Copper Mountain, they will be doubling the production because the Cloncurry production will probably even be more than theirs. So they'll be heading towards 80,000 tonne of copper a year production. That's a substantial mid-tier copper producer. And what I think will then happen is it's of such a size that it is relevant to many institutions who would not look at the company today, either Copper Mountain or Altona.
Absolutely.
And that in itself can lead to a re-rating. So I think it is a 1 + 1 = 3. Sorry.
Great. And I think the combined market cap will be well over 300 million
That's
Canadian,
correct.
I think. And you will list the stock also on the TSX and the ASX, right?
That's correct.
Yeah.
So the Altona shareholder is going to get a Copper Mountain share for about just something under every 10 shares that he owns. And at the shareholders' election, that Copper Mountain share can be listed in Australia or in Canada. And I think the Australian listing is very important because the Australian marketplace doesn't have many companies that look like this. The few copper producers that are there have their issues, they're short mine life or there's nothing quite like this. Two large mines with long mine life. It's a powerful combination.
Absolutely, and I see also a lot of exploration upside, of course, for the future. Before we dive into that, because I mean, your project is 4,000 square kilometers large, and as I always point out, it's approximately 10% of the size of Switzerland, where I live. Yeah, so it's for us, it's really to think about it, to imagine that this is outstanding. But what you have is on the small portion, you have the little Eva mine. Maybe you can elaborate a little bit, let's say, on the highlights of the definitive feasibility, where you think the production might go. 40,000 tons per year is proposed. Maybe you can do a bit more, and maybe you can highlight also cost, all-in cost, stuff like that.
Well, what we propose to build in Cloncurry will now change a little, and that Copper Mountain have got their own views about how they might do things. They own their own mining fleet. We were looking at contract mining. So there's a lot of things, and that will all come out. We're working together collaboratively now. Some of my guys are in Canada, some of their guys are in Australia at the moment, at their cost, I might add, to change the study. But essentially what we've got is we've got another large open pit copper mine with a very similar kind of processing plant. Makes a flotation concentrate, which you can readily sell. And it will cost around 280 million to build. Hopefully in this next study that cost will come down. Cash costs sitting around $1.60 to $1.70 a pound. Hopefully again in this next study they'll come down. All-in costs just are currently around $1.90. Maybe they'll come down as well. So again, just like Copper Mountain, probably an even better margin coming out of Cloncurry once it's up and running. And what we've been doing with Copper Mountain is we're looking at fast-tracking this. So that we can, they're doing some detailed engineering now. They're in Australia talking to contract people, and perhaps once the merger is completed, which we expect in about late March, we can look to starting to develop Cloncurry in July, which is really quick. It's going to be challenging, but if we can do that, we'll be in production in 2020. Which is not far away. That's not far. That's 2 years almost from here. And what will you produce? It's like a concentrate? Yes, a copper gold concentrate, which is very standard. And I think, as I've said to people before, in Hamburg, it's not called Norddeutsche Raffinerie anymore. Aurubis. Aurubis, yes. There's a huge copper smelter there. It's been one of the biggest copper businesses in the world. It's here in Germany, and they import concentrates from Chile, from Africa, all around the world. We don't have that export. We've done a deal with Glencore where we are selling at the mine gate. They have a smelter nearby, right? And they will deliver to their smelter, which is only 160 kilometers by road. Fantastic. So we just concluded that late last year, and that means a big saving in freight. You also get a discount in royalty from the state government as well. So it's a good deal. So you don't have this huge logistics chain to move copper concentrates around the world. That's right. And I think you have put, let's say, to sell your final product, the concentrate, you've put a lot of risk away because there's nobody else bigger than Glencore to deal with on the one hand, but you have no hedging on that, right? I mean, that's straightforward pricing. Hedging is, I think, is a really clever thing to do. But bad hedging is usually hedging that's put on you by banks to support their risk in financing. Exactly. Smart hedging protects. It's just like an insurance policy in your house. Exactly. But the worst kind of hedging you can do is, we believe there's a rising copper market. Copper prices are looking good. So hedging today for a long period of time, you would get a copper price 20%, 30% lower than what the market is. Why would you do that? So hedging in an appropriate way is a smart thing, but we won't be doing any of that long-term hedging.
Fantastic.
So when we look to finance Cloncurry, we'll be looking at, and it's hard to talk about it because it's all ongoing at the moment, but we're looking to do it in a smart way. Many of these things you do in business are opportunities to destroy value. So if you're just careful, we can create value and create a stronger company.
So we are talking about, let's say, approximately 300 million Aussie dollars, approximately. Yeah, I mean, you have cash, Copper Mountain has cash, you have a cash flow. Where do you see the gap? Is the gap like 150 million US dollars? Is that realistic?
It'd probably be 100 million US dollars, but you do want to have a little bit more for working capital because things do go wrong. And there are a number of ways of getting that. There's no problem for a project like this in copper and a company like Copper Mountain and enlarged Copper Mountain in getting money. It's just what price and what it looks like. So again, that's what we're looking at. You can do things like short-term bond instruments. You can do, there are metal streaming. I'm not a fan of that. There's many ways of getting money, and that's what we'll be working out over this next 3 or 4 months.
Absolutely.
And
so by the summer, you have to be done there, right?
Absolutely. So there'll be a very different, once you've finished the merger, Copper Mountain are looking at their mine and looking at their mine life and going to put out a new 43-101 report, and hopefully that will show a longer mine life. Similarly, we're updating using the Copper Mountain approach ours, and then, so post the merger, there'll be new, very current information in both projects, financing in place, and I think investors are going to see something that's really very attractive.
Fantastic.
And the certainty will be there.
Absolutely, great. Maybe one last word.
Sure.
As I said, on your huge property, how is the perspective on exploration?
Well, as we talk here now, Jochen, we're just a few weeks away from releasing some drill results, so I have to be very careful.
Lovely.
But I'm smiling.
Yeah, I like it. I like it when you smile.
The Chinese option stopped us doing some things that we wanted to do, and we developed a whole bunch of interesting techniques and were really exciting things that we wanted to test, and we're able to do that just before the end of the year, before the wet season set in Queensland. I think what has happened is during the downturn in copper price, the mining industry went to sleep. So we were able to use our knowledge from the area of geology and so forth, and just being a bit nimble to double our land holding. And now you can't do that because we have big guys in there like Newmont and Rio and
BHP.
BHP spin out South 32s there. So the big guys are there. So we're quite nimble, and it's quite a strategic asset. And I think we're going to see a lot of fun there. And who knows what we might find. So, you know, there's that area has not just copper. It's got gold-only deposits. There's cobalt-rich things. There's uranium rare earths. There's world-class lead zinc mines. There's silver mines. It's an interesting area, Mount Isa, and we're going to be there for a long time.
Super. That sounds like a bright future. Alistair, thank you very much. We keep fingers crossed. All the best for you. I'm pretty sure the merger is going through. As you already stated also, I think in the press, that all the large shareholders are voting in favor, and also the combination makes really sense. So congrats on that, and I'm really happy that you get your project now done, financed, and in production, because this world needs copper.
They certainly do, Jochen, and thank you very much for your time and your support. And also to shareholders, I really want to thank you, those of you who are watching, for the support over these years. It's been much appreciated.
Super. Very nice final word. Thank you very much, Alistair.
Thank you.
Thank you. Yeah, ladies and gentlemen, there was Dr. Alistair Cowden, the Managing Director of Altona Mining, and you heard it, the merger looks like that it's done. Of course, it's always done when it's really done, when everybody has agreed and signed. But I'm pretty sure that by the end of March, that's the timetable, everything is done and filled and the documents are produced. And I would say, combining those two companies and combining those two, future mines, then one mine is already producing, the other one will be done and will be up and running in March, April 2020. That's the game plan, I would call it. And it looks like we are getting a nice mid-tier copper producer, which has some nice gold and silver credits, and in some of the safest jurisdictions in the world. So I would suggest check it out. Thanks for watching us. Bye bye from Munich.